What factors should banks and NBFC consider when selecting a co-lending partner to ensure a successful and mutually beneficial collaborations?
But I think someone very rightly pointed out at the beginning of this discussion that it's just not a marriage between two people. It's actually you're getting a ready-made family, right? And hence the challenges are manifold. So I think, the guiding principles of a successful partnership in my mind would be four. One is intent. Both parties have to be equally intent. The relationship, alignment, trust have to be there. So some of the things that need to be considered and kept in mind is the alignment of vision and goals between the two parties. And this is even more challenging when it is a bank to NBFC than NBFC to NBFC. For any partnership, it is crucial that the vision and the business goals are aligned. The entities need to be on the same page with everything, whether it is the customer segment, the product, the risk, pricing, role and responsibilities, compliance requirements, etc. The second and very important one, again going back to the getting together of two families, is to actually find the best symbiotic fit. Both parties have to be equally convinced that this relationship will be mutually beneficial and will fill a need gap that they may have, right? Only then will they be able to devote the required time, management, bandwidth, and the resources that this would require to be a success. If any parties have to compromise on institutional goals or vision, then it can never succeed. The third and very, very important part, and I'm, again, it was touched upon in the presentation, but this cannot be kind of emphasized enough, is the technology platform and the ease of integration that the two bring together. Because at the end of it, this is the core, right? Marrying the two LMSs or the two systems, and hence the maturity of the partner ecosystems to allow for thorough integration of data sources and processes is in somewhat of paramount importance. Seamless and efficient integration is necessary, and it requires clarity on the capabilities of both systems, on the customizations that may be necessary, and on any limitations that exist, and they will exist. But before you actually go into the partnership and start the development, else it can just become a never-ending whirlpool of issues. And more than anything, there is no one size that fits all in this. Hence, it's very, very important for both partners to have a agile and flexible development mindset. I think this is something that if this is something that exists, a lot of the challenges during and post will be taken care of. The next, and again it was touched upon, is the risk appetite, right, and the capital, the ability to fuel the growth of the fintech or the NBFC. One of the primary reasons why banks or NBFCs and fintechs enter into marriages is that beside the obvious advantage possible digital platforms, etc., is to expand distribution, to be able to get insights into customers segments that they would otherwise not normally have served, to improve their product portfolio mix, and of course for better efficiency and lower operational costs, right? However, very often they are unable to accept or appreciate the nuances that come with these different customer segments, which the partner NBFC or fintech may be targeting. And when that happens, there is an obvious mismatch in the risk appetite or their ability to serve it. Hence, it's imperative that they appreciate it, they buy it, and they have the risk appetite and the required supply of capital, not just to start a partnership, but to continuously and constantly fuel the growth and scale it. And last, and of course, this is supplemented, this has to be supplemented by commercials that are viable and make sense for both partners. If anything is one-sided, it's not going to work. The last, but definitely not the least, and I think one of the most important pillars of a successful co-lending partnership is, the transparency and communication. The hallmark of a successful, scalable, long-lasting partnerships is properly structured models and watertight SOPs, right? All processes, handshakes, responsibilities, data ownership, transfer, payment terms, conditions, liabilities, etc., need to be clearly spelled out and agreed to before the commencement of the business. And in fact, one of the key factors that often gets overlooked is the need for timely reporting and robust MISs, right? This is the only way to build trust, ensure accountability, and to grow together to achieve scale. So while there's tremendous opportunity in collaboration, in co-lending, there are significant, obviously we all know business, legal, and regulatory challenges. And the key to success will be in balancing, these operational considerations along with compliance and risk considerations. So I think those are some of the key pillars that I would say is an essential requirement for a marriage to work or a co-lending partnership to work.
Thank you very much, Sonia ji. I think you have very well covered. You have given the guidance to us also. This robust MIS, which is one of the area which I think has come in the discussion.